I'm Merit Jano, Dean Emerita of the School of International Public Affairs, and a pleasure to be with you. I'm core faculty of CJEB, and it's my real distinct pleasure to moderate this panel on digital frontiers, AI, blockchain, and crypto. I'd like to very briefly introduce our panelists, but you have their bios in some detail, so I will be brief. First, we have Yuval Rooz, who is a digital finance entrepreneur. I think we have to start there. And he's also co-founder and chief executive of Digital Asset. He formed this company in 2014 to harness the promise of blockchain technology to transform financial infrastructure and markets. So I think we'll hear a bit about how this is proceeding and is playing really a very growing role in shaping global finance by merging some traditional systems with very decentralized technology and privacy enhancements. He started his career at Citadel and DRW. We also have with us Oki Matsumoto, chairman of the board of Monex. He founded Monex in 1999, which is a major online financial institution that operates online retail brokerage in Japan and the United States. And he is also chairman of CoinCheck, a crypto platform. I should say that I have the privilege of serving together with Oki on the board of MasterCard. We're also joined by Takuo IMAGAWA, Vice Minister for International Affairs at the Ministry of International Affairs and Communications at the Government of Japan. And as Vice Minister, he has overseen international digital policy, including digital infrastructure, cybersecurity, information integrity, and emerging technologies such as AI. And prior to his current role, he served as Director General of the Telecommunications Bureau. He has a PhD in economics with is a specialist in information sciences, so wonderful background for your very broad responsibilities. So we have tremendous expertise on this panel, and I'm sure a valuable discussion to follow. I'd like to first invite Yuval to start us off. And, you know, today's discussion is very timely because it's the first conversation of this kind I know that I've had since the U.S. signed into law the Genius Act, which is the first comprehensive U.S. framework for stablecoin issuance and regulation. It's been coming, but now it's here. And so it's a very different moment. Yuval, over to you.
Okay. Everybody can hear me? Okay. So hi, everyone. I'm Yuval. As you can see, I'm the crypto guy because I'm not wearing a jacket. But I will not be making any crypto projections today. I will let Oki, as chairman of a crypto exchange, tell you if the price is going to go up. I called my presentation The Inevitable Future of Digital Assets, and the reason inevitable is because what is happening globally around digital assets is quite tremendous. A lot of times people ask, are we there yet? And what I will tell you is that when you think globally, and not just my company, but other companies in the space, all the way from repo, payments, US treasuries, gilts, mortgages, insurance, alternative investments, commodities, loans, private loans, broadly syndicated loans, and all the way to horse racing. People are using the technology to really change how value exchanges hands. Now, what we're seeing is that the US have been kind of behind when it comes to regulation, but I would say that regulation to me is an important component, but it's almost the posture of the government that is even more important. And what I mean by that is a lot of times people associate blockchain with crypto assets, which is true. There is an association, but for the most part, you could use blockchain technology with existing regulatory frameworks. And when you think about the previous the US administration, a lot of financial institutions were worried about using the technology at scale because they were worried that the regulator would associate it with crypto and therefore put them in the penalty box. So as Merit mentioned, there are two important legislations that are taking shape in the US. One is the Genius Act, which is really making stablecoins into legal tender, which is a very important component. And then the Clarity Act that is going to bring clarity into how you could use the technology. Now, I think that back to the posture, when you actually look at how the regulators are starting to use the technology or look at the technology, the SEC Crypto Task Force is a great example. If before everybody was scared talking to the SEC about the technology, you could just go to the SEC Crypto Task Force and look at how many submissions and open conversations have taken place with the SEC, all the way to the very recent battle around Coinbase applying to get some exemptions from regulation in the US and all the submissions in response to that. Now, I think the goal and what I've heard a lot in this conference around, the tectonic plates that are shifting globally, what you're seeing is that a lot of governments are using technology and digital infrastructure to position them to, the next 10, 20 years in terms of global dominance. And, there was a comment in one of the panels around a SWIFT alternative. As we all know, China developed the EU1, and there's a lot of other initiatives, whether it's a project in Hong Kong of FX settlement across BRIC countries. So you're seeing a lot of governments are using this technology to really position themselves for the future, and therefore it's a question of, are we going to take a passive approach to this technology or actually going to take a more active approach? With that, I think that one of the things that, again, is important to see just from this slide real quick is that we're seeing that regulation is being driven, not just in the US. Actually, the US, like I said, was behind. We had the MICA in Europe. Japan have been probably at the forefront, and Hong Kong. But again, now we're seeing the US catching up behind. And as a result of that, we're seeing that the market outcomes could have an impact in so many different areas. So I think I just want to maybe make a quick comment, which is a lot of times when people think about blockchain or crypto, they associate it with the left-hand side, which is mobility. So the ability to move assets 24/7 in a frictionless manner. And that has been probably one of the most interesting use cases around stable coins. Is today's stable coins are about $300 billion asset class, and we're probably going to see that only grow. But as you start seeing that the asset class is becoming more acceptable, there is one component that these systems or networks haven't solved, which is privacy. So as we all know, in crypto, people have accepted that there is no privacy, which is not something that global publicly traded companies or large trading firms would accept, right? As Merit said, I started Citadel. Citadel would not be comfortable with everyone seeing their collateral movements and their trading positions. So what we're seeing is a big shift now in our industry is to be able to have the functionality of mobility plus privacy would really create tremendous opportunities in the space. And maybe just to discuss real quick, one of those opportunities, so we talked about US Treasuries earlier on, but collateral mobility. So collateral mobility, if you just look at the number, currently there is $260 trillion of what you would call eligible collateral in the world, where only 10 to 11% of it gets used. Now, a lot of it doesn't get used as a result of the inability to move assets globally 24/7 in a frictionless manner. And the result of that is that a lot of organizations over-collateralize their balance sheet, They don't manage their balance sheet as efficient as they could. And we just see that this is one of the biggest opportunities as a result of this technology. You'll see a comment. We do believe that beginning of next year, you would start seeing US Treasuries, gilts, Eurobonds being able to move 24/7 globally. And the reason why that is interesting is because as governments are fighting for dominance and positioning, these assets, these government bonds that are really important to finance their activity, if you can enhance their utility, meaning they become even more attractive to investors because not only that they provide the investment aspect, but they provide an additional utility, that is really helping those government position. And that's why we've seen, especially around US Treasury, quite a lot of willingness from both the administration and regulators to really think about how do you make US Treasuries even more usable in the global perspective. And again, there's a few examples. Just look at the capital efficiencies for hedge funds, asset managers, or collateral management companies if you could actually mobilize these assets 24/7. Cool. So lastly, because we are in Japan, I thought we would conclude just with a quick statement. So I mentioned US Treasuries, Eurobonds, and gilts. JGBs is probably in the top 4 or 5 most used collateral in the world. And as we're going to see these other asset classes globally move into these type of networks and offer the ability to move, it is important for Japan to really think about how do you position JGBs as part of this global collateral network. How do you allow government bonds here to be transferred globally? And then similarly, you can think about stable coins. There's definitely a lot of movement from banks here to think about stable coins and deposit tokens. Again, not necessarily from a local market perspective as much as how do you make sure that the yen is a global asset class that can participate in the global economy in a frictionless manner. So with that, I'll hand it over back. Thank you.
Thank you very much. Well, thank you. I'd like to turn the floor over to Oki Matsumoto.
Okay, I'd like to apologize for 2 things. One being that I didn't prepare the slides. And second, I'm wearing jackets disguising I'm not involved in crypto. Okay, I think I'd like to talk about the 2 things today. One is the great opportunity for Japan, and second is the great threat or challenge to Japanese financial sector and the regulators as well. I'd like to talk about the potential of AI, blockchain, and the token-based finance in Japan. In Japan, we are very familiar to robots. This is a country whereby the people grew up with Doraemon and the Astro Boy, Atom. So the robots are always friend, partner, not a threat. So it's a little bit different from the other countries. So I think as regards how to adopt the robots or technologies, Japan is really ready to go. And meanwhile, there is an aging society, of course, or aged society, as you know, in Japan. And there will be more and more needs for people, old people, to get more, how do you say, the service from AI, who can help you, manage your money, or the gather information and such and such. And there will be more automation is needed. So there is a good culture to accept robots technology, and also that the aging society does need the help from those technologies too. And biggest issue of Japan, I would say one of the biggest issue of Japan, or chance of Japan, is that we are not good in using English. Okay, but AI is going to change it. With AI, we don't have to try to understand English. So up until recently, right now, people need to use Japanese financial institutions as a service provider for Japanese people. But once AI kind of agentic service starts, then people can just use those AI, and then the AI will just find those services from the world. So that is very great news for Japanese people. Okay, and also, as you know, the Japanese are really active in investing into outside of Japan. Okay, we have 13 trillion US dollars of personal financial assets. It's huge. And then with the NISA or those kind of program introduced by the government, much of those money actually flew over to the abroad, especially to the States. Bought a lot of S&P 500 ETFs and those kind of things. So although Japanese are not so good in English, but lots of, aspiration or, the idea to try to invest outside of of Japan. So this AI agentic kind of service will really provide a great opportunity, a great service for those people. And of course, there are risks associated with those kind of things. Even AI can become a victim of phishing, the fake smart contracts, or some kind of social network scams. So here comes blockchain or Web3 ID or those kind of technologies. When the AI starts, providing a lot of services, and then we need a safeguards for that. Web3 ID will make AI understand who truly this AI is dealing with, and also the blockchain can create immutable information, and also the multi-signature system can ensure that no unauthorized actions are taken. So those introducing those blockchain or Web3 ID are very important, I think. And we do have My Number. It's a great kind of national ID system. It even has got a private key in it. My Number card has got a private key. So we do have a good technology kind of foundation as well. Meanwhile, I think there is a huge challenge in Japanese financial sector and the regulation as well. As I said, going forward, up until now, the regulators just control, supervise Japanese domestic financial service providers, and then they can just prevent foreign unregistered service providers from soliciting Japanese customers. But going forward, who cares? The Japanese just go using AI agent. The AI agent will find the best service from the world, customer without using any English, and then just do transactions. So I think that will create two things, one being the challenge for regulators. The current way of regulating or policing domestic players will not, achieve the aim of the regulators. And also, this will create a big challenge for financial institutions as well. Going forward, for brokers or banks or asset managers in Japan, all players, banks, brokers, asset managers in the world will become the direct competitor to Japanese financial institutions. the smartphone disrupted a future phone, Garake. Amazon disrupted the retail. The same thing will happen in finance. So both regulators as well as financial institutions in Japan really wake up and need to adapt to this change, I think. I think, as I said, with this huge personal financial asset and the readiness or familiarity to the technology, robot, and some, orientation to the a global investment, the AI will create a very huge opportunity for Japan. And it will, wake up the dormant capital in Japan too. So it's good for Japan. But there's also a lot of challenges. Thank you.
Thank you very much, Oki, for offering some perspectives on great opportunities and challenges. I'd like to invite Mr. Imagawa-san to please, he has a very broad perspective on AI, and thank you for sharing your thoughts with us, and I think some slides as well.
Thank you, Jeno-san. Distinguished guests, ladies and gentlemen, it's a great honor to be here today. Thank you for having me. I am IMAGAWA Takuo, Vice Minister of MIC Japan. Let me begin by expressing my sincere appreciation to Columbia Business School for organizing this invaluable event. I am especially grateful to Professor David Weinstein, who was my professor during my time at Harvard nearly 30 years ago. This is a connection that makes this moment personally meaningful. Allow me to briefly introduce myself, referring to slide 1. Yes. Since assuming this position last July, I have been engaged in a broad range of international digital policy issues, including emerging technologies such as AI, digital infrastructure for building resilient societies, cybersecurity to safeguard our digital ecosystem, and information integrity to promote trust and transparency. Incidentally, since my initials are IT, I am deeply committed to advancing information technologies. And I personally refer to these priorities as the 4 I's. In an era where digital technology plays an increasingly central role in global competition and economic security, particularly in the Asia-Pacific region, these issues demand robust international cooperation. Among them, AI policy has emerged as my top priority. And I'm not a finance guy, so please allow me to focus on AI. Here we present international comparisons of AI usage. The upper bar chart shows usage among citizens, with the blue segment indicating the proportion using generative AI. The lower chart illustrates enterprise usage, where the blue and green segments represent the rate of generative AI adoption in the workplace. In both charts, you will see Japan highlighted with a red frame. The data reveals that AI adoption in Japan remains relatively low compared to other countries. Additional research shows that Japanese users tend to be more cautious, largely due to concerns about risks and unintended consequences of AI. So this indicates a clear need for enhanced efforts in 3 domains. Number 1, communicating the benefits effectively to the public and business. Number 2, promoting safe and trusted AI application. Number 3, fostering an ecosystem where innovation and governance go hand in hand. So next slide. This is a typical bureaucratic slide. I'm very sorry, I'm getting this from the cabinet office. In response to the challenges and opportunities presented earlier, Japan took a decisive step by enacting a new AI Act this past May. This legislation reflects our commitment to aligning with international norms, ensuring that the development and use of AI in Japan strike the right balance between fostering innovation and managing risks. At the heart of this initiative is the establishment of a new AI strategic headquarters to be placed directly under the leadership of Prime Minister. This signifies the importance Japan places on AI, not just as a technological tool, but as a strategic asset. Under this framework, we will formulate a comprehensive AI action plan that guides policy measures across sectors, advancing innovation, encouraging responsible adoption, and protecting public trust. Japan aspires to be an innovation-friendly nation where AI can thrive safely, ethically, and inclusively. Now let's take a look at this slide, which outlines the comprehensive set of initiatives the Japanese government will pursue under this new AI Act. These initiatives are designed to build a strong and responsible AI ecosystem across Japan. They include accelerating AI-related R&D, such as developing multilingual large language models, promoting expansion and sharing of AI infrastructure and resources, such as data centers, driving AI adoption, especially in SMEs and public services, fostering global cooperation in AI to lead global AI governance. Together, these efforts reflect a bold and coordinated strategy to make Japan not only a leader in AI, but a trusted partner in its global development. This slide highlights Japan's contribution to shaping global AI governance. As shown in the red-framed section, Japan has taken leadership role in key multinational forums, including G7, OECD, and G20, utilizing the opportunities to serve as a presidency and active convener. Our commitment to a global cooperation on AI began early. Back in 2016, Japan was among the first to propose the need for international discussions on AI governance. Over the past decade, we have worked tirelessly to promote the development of safe, secure, and trustworthy AI systems while ensuring that innovation continues to flourish. In 2023, under Japan's G7 presidency, the Hiroshima AI process was established. Based on this mechanism, a voluntary reporting framework was introduced in February of this year, allowing companies to demonstrate how they are applying the International Code of Conduct in developing advanced AI systems. The new operational framework now provides a standardized approach for companies to demonstrate their alignment with the Code of Conduct actions. Companies can disclose comparable information about their AI risk management practices, incident reporting, and more. This framework has already gained substantial industry support, with 20 leading AI companies having submitted their report already, enhancing transparency and accountability. In parallel with these efforts, Japan is actively working to expand its global reach. The Hiroshima Process Friends Group, launched last year, now includes 56 countries and regions, creating a collaborative platform for broader engagement in shaping global norms and practices. Through these efforts, Japan seeks not only to lead, but to connect nations and stakeholders around the shared vision of safe, secure, and trustworthy AI, built on transparency, inclusivity, and responsible innovation. This is a comparative view of global approaches to AI governance. Across regions, we see distinct strategies shaped by different priorities and legal traditions. In the EU, a comprehensive and precautionary model is in place. Through the AI Act, the EU classifies AI systems based on risks and enforces strict requirements for high-risk applications. This framework places a strong emphasis on human rights, accountability, and transparency. The US, by contrast, has unveiled an AI action plan just last week that prioritizes innovations through a more deregulatory approach. It is built around three pillars: accelerating AI innovation, building American AI infrastructure, and leading in the international AI diplomacy and security. G7, or Japan, adopts a globally coordinated, consensus-based, and voluntary soft law approach, utilizing flexible guidelines and agile multi-stakeholder processes. This model highlights adaptability and innovation, positioning Japan as a bridge in global AI governance. Each of these models reflects differing philosophies: the EU's precautionary stance, the United States' market-driven innovation, and Japan's agile and inclusive governance style. Rather than conflicting, these approaches offer complementary pathways toward the shared goal: building safe, secure, and trustworthy AI for all. Finally, I'd like to briefly touch on some key considerations when applying emerging technologies in financial services. Since I'm not directly involved in the finance industry, I will not go into the details. However, even though emerging technologies like AI, blockchain, and crypto are reshaping the financial sector with innovative services, the adoption must be carefully aligned with regulatory, operational, and security frameworks. It is clear that these technologies demand sector-specific considerations, especially given their connection to the integrity of our monetary and financial systems. In this context, I believe 5 dimensions stand out as particularly critical when these technologies are applied to the financial services. Number 1, compliance, ensuring alignment with the existing regulation in this sector. Number 2, cybersecurity, protecting against the vulnerabilities such as algorithmic manipulation. Number 3, data governance, ensuring safeguarding sensitive data such as privacy. Number 4, interoperability, enabling compatibility with legacy and cross-chain systems. Number 5, risk management, monitoring volatility and systemic risks. These pillars are not just technical requirements. They are vital for building resilience, trust, and responsible innovation in the financial domain. So thank you very much for your attention. I look forward to engaging in the meaningful discussion later on. Thank you.
Thank you very much. Thank you very much. Well, I think we have heard from some very important market participants and in fact a leader in the policy world as well. So if you don't mind, I'll start us off with asking a few questions to Yuval and Oki about market structure, market oversight, sort of technologies and innovation, and then shift to Imagawa-san thinking about what these might mean from a policy perspective. So I guess I'd like to start with you, Yuval. I mean, as you were describing the scope for innovation, scope for change, what kind of market structures are you thinking are going to follow? I mean, if you think about non-banking financial institutions playing a role, potentially altering the role for banks to play, if you're looking out a few years, what kind of the shifts are you imagining might happen in market structure in a world where, we have proliferation of stable coins, but also other kinds of digital assets?
Yeah, so I think that over the last few years, even before crypto, we've seen a lot of, there was a conversation about private credit earlier. You're seeing companies like Citadel Securities, even Jane Street, starting to look more and more like banks, but they are not banks. And if anything now, if we go into this industry, we're seeing the Genius Act is contemplating new organizations that till today, generally speaking, were not associated with providing financial services, are going to become likely to become financial services providers. Just recently, Circle applied for a bank license. Over the last, I think, 10 to 20 years, we've seen probably only 2 financial institutions get access to the Fed system. So I think what we're going to see is technology companies becoming or starting to look more and more like financial services providers. I am aware of at least 5 tech companies that are contemplating doing their own stablecoin. And as a result of that, again, starting to look more and more like financial services providers. And I mentioned Coinbase. I think that around the offering of securities, we're starting to see companies that traditionally have played in exchange space for crypto assets are starting to look more and more like a broker-dealer that is also providing an exchange services for U.S. equities, and there's a lot of things that can happen as a result of that. I mentioned one of the more heated debates is recently Coinbase asking for exemptions from Reg NMS, which is investor protection legislation, and the industry reaction to that have been pretty vocal. saying that that is unheard of. So I think that you're going to see a lot of tech companies starting to look more and more like financial services providers, and you're going to see companies that have played in the crypto space starting to move more and more into traditional assets.
Thank you. Okay, I don't know if you want to comment on market structure, but you're most welcome to if you have perspectives on that. But I think, what happens outside will also impact market structure in Japan. And so if you wish to comment on the Japanese context, as well as sort of, you talked about the the sort of natural friendliness in Japan to robots and sort of aging society and so on would lead you to think this would be a country where adoption might move forward quite easily. But there are also other arguments that against that easy adoption here that have to do with market structure. So would you care to comment on
Okay. As regards market structure, as far on Yuval's comment, as far as I understand, that the Genius Act doesn't allow stablecoin to earn interest, right? So I think a tokenized JGB, as you said, tokenized JGB, tokenized deposit, tokenized money market instruments are actually, in a sense, much better than stablecoins. And tech companies or startups, I think the traditional financial finance sector players like banks or trust banks are actually better fit in providing the tokenized securities. So I think there's a huge chance for those traditional side as well, as long as they capture this situation rightly and also with the regulators react to this situation very well. I think lots of opportunities. And also, as regards market structure, I think probably that would be better than just having various, so many tech companies launching various stable coins. It's technology-wise, it's great, but it's not so friendly for people to use, right? So it will be much better that if there's a tokenized JGB or tokenized deposit just available for everybody. But anyway, so that's kind of my take on the market structure side. As regards robots friendly and the aging society, blah blah blah, it all, I think at the end of the day, the technology doesn't make people use that service. Even technology is great, and technology is rational and safe or whatever. At the end of the day, people need to feel that, oh, this is really good. This is very easy to use. This is good for me, right? So I think at the end of the day, that how and who can create that kind of really looking like, feeling like an easy to use service are going to be really key. So creating real demand is very important, I think. I've been in this blockchain-related things for several years, but always, I've been thinking that, wondering myself that people use so many difficult words, so many difficult technology or jargons or blah blah blah. I think the crypto or blockchain industry should try to change how to speak, so that the people can more easily understand what's going on.
Thank you.
If I can just add to that point, I think that in many cases, as they say in English a lot of times, it's a feature, not a bug, Oki. And using the jargon, in many cases, unfortunately, gets used to confuse people on purpose. So for example, one of the most favorable words in this industry is tokenization, because it seems like such a simple word. And recently there was Robinhood, for example, made an announcement around tokenizing OpenAI. And it just made all of their customers think that they're just trading OpenAI. That just seemed and it was really only when OpenAI said, actually, they do not have our shares, suddenly that created quite a lot of concern by the investors, and even the SEC said, to your point, you cannot just use simple words. You actually have to be very specific about what you're doing with the technology.
So let me ask you guys one more question, and then I'd like to ask Imagawa-san a couple, and then open it up. So please, if our audience would think of questions top of mind for you. What do both of you see as the big risks we should be worried about?
There was in the first panel, there was a whole conversation about the U.S. Treasury trade. And I think that one of the things that we need to appreciate in older technology is that it gives a break, right? So it's like when electronic payments got created, it made it easier to do a run on a bank, for example. If all of these assets are now able to move 24/7, you have risk for financial crises to develop faster, and there is no the weekend to really think about what do we do when Monday trading opens. So I think that one of the things that we need to think about, both as an industry and regulators, is really what is the kill switch? What is the way for dealing with crises, especially now when we're thinking about every exchange in the world, and that is very much driven by crypto, is announcing moving to 24/5 or 24/7 trading, right? As these things happen, maybe if the US Treasury, for example, trade starts decoupling, what are the tools that are available to regulators and policymakers to make decisions if the system never stops?
I think blockchain are generally good. You need to use it in the right way, but the concept of a blockchain, or structured blockchain, is just increase the security, I believe, as long as you use it in the right way. But AI, I do see some risk. I was watching that Sam Altman's the past weekend at YouTube, and then just a few days ago, and he said that GPT-5 has basically surpassed human being. And as human beings make mistakes, okay, look at our history. Time to time, we made mistakes. And AI is the super version of human being. And they make mistakes as well as human being. But in this case, they are more powered. They're much faster and much more powerful. And they make mistakes. So this is more like Imagawa-san's the area, but the governance is crucially important. But I'm not the expert on that, but I'm genuinely worried about how to deal with that. Not only that the financial business, but also, that the SF science fiction movie of the world is really there already. Terminator's there. We've got to be careful.
Okay. So, chat says that I went to Princeton. I haven't been able to correct that, so that's clearly an ongoing mistake. I think one of the things you've raised implicitly is, when you get into agentic commerce, where is the human intervention, going to come in? And I think that's a real question. But I often think, AI is actually going to help us a lot with security and resilience as well, if we learn how to harness it. And I wonder if Imagawa-san might offer a few thoughts on what you think are the most promising ways that AI could enhance security and resilience.
Thank you very much. As I said, I'm not a finance guy, so I can't speak about the financial regulations. I have to talk to the Financial Service Agency. But the only thing I can say is that we should seek the good good mixture of the promoting innovation and mitigating risks by the emerging technology like AI. So the strict regulation in advance in this field would hinder the innovation, and also it hinder the entrance to enter the market. So the incumbent would be, larger than entrance or startups. So we should avoid this too much regulation in advance. And technology development moves very fast, and we can introduce regulation later on. The regulation could be behind the technological development. So I think this kind of thing would be applicable to AI technology, but also blockchain and crypto technologies too. And as you pointed out, AI, especially AI agent, could be very important technologies to ensure the cybersecurity for the next generation digital infrastructure. So I went to the Mobile World Congress in Barcelona in February, and I saw a lot of the AI agent models to handle with all kinds of risks autonomously. So AI agents allow real-time threat detection and also self-healing capabilities and post-quantum cryptography optimization. All these things could contribute to the ensuring the safety and security in the next generation digital infrastructure. So this is a very important thing, I think. The one thing I would like to add is I am worried about the consuming a lot of energy by blockchain networks. And also we have been we have been surging demand for data centers. Data centers and AI would consume a lot of electricity. So we have to work on the very good mixture of the power grid and also telecommunication network, optical fiber networks. And this is also another issue for our policy. Thank you.
Thank you very much. On both markets and on technology, on innovation, on differences in approach and emerging approaches. So please join me in thanking our very distinguished panelists.